I'm Greg Hunter. Welcome to USAWatchdog.com. With all of the market turmoil, and, for example, China is shutting down their markets a few times, which is unbelievable, and the gyrations in the markets and the global goings-on in the Middle East, which could spell global war, I decided to bring on Rob Kirby from Kirby Analytics. He is an analyst in the macro scale for economics. He does forensic analysis. He's been right on. Rob Kirby, thanks for joining us again on USAWatchdog.com.
Pleasure being with you, Greg.
There's so many places to start. Let's start with the China Plunge. I mean, one plunge is, it could be a fat finger, which I don't believe in any of that stuff. And then, now they're plunging again, and they've been plunging, and so are our markets plunging. And to watch Fox Business last week, it's, China's markets are all controlled. As if ours aren't. What is going on? Is this the beginning of the closure of the markets you were talking about, the financial system?
Well, I think the last time we spoke, Greg, it was early in December, and what I suggested to you is that a window was opening where we're very likely to see some systemic not interference, but some systemic breakdowns in our financial universe were likely to start occurring in this sort of next 3 to 4 month time frame. And lo and behold, it looks like we're starting to see the beginnings of exactly what we were speaking of. And Greg, the reason why we're beginning to see these things start to unfold now is that everything that's going on in our financial universe that we've been told about by our financial elites, whether it's the Federal Reserve or officials at the U.S. Treasury, or whether it's people at the European Central Bank, everything that they've been telling us has basically been a lie or a false flag or fraudulent, and it doesn't start and end anywhere because it's pervasive and it's literally everything they tell us is misdirection. And let's start off really with this foolishness of the last rate rise by the Federal Reserve, and we were told that conditions were ready for liftoff in the U.S. economy, and that's the reason why they chose to raise rates, and other people have said it's to save face or maintain their credibility in financial markets. Anyway, my analysis says nothing could be further from the truth. And let me go on and just explain for a minute just what I believe the Fed rate hike was all about. I've got to do a little backtrack before I get to my analysis. And I'd like to highlight an article that was written by a Mexican gentleman by the name of Hugo Salinas Price early in December. If you Google his name, Hugo Price, and Bloomberg, is Bloomberg hiding something? You will find the article. And in this article, Mr. Salinas Price highlighted how global stores of U.S. dollar reserves were plummeting over the last 8 or 9 months. And that indeed has been the case. U.S. dollar reserve holdings have dropped close to $1 trillion in the last 8 or 9 months, and that's on a global scale. And that, and when I read the Salinas Price article, it made me go and do a little bit of investigation as to, what happens when reserves drop the way the Salinas Price article highlights. It means that foreigners have been selling U.S. government securities.
Getting out of it, getting away from the dollar.
Yeah, they're abandoning the dollar, Greg. So if foreigners are abandoning the dollar to the tune of close to $1 trillion over 8 or 9 months, the question to me became, rates haven't backed up, Greg. The 10-year bond is probably a little bit lower in yield right now than it was 8 or 9 months ago. And if foreigners are throwing and pitching their U.S. dollar reserves, who's buying them? And the answer as to who's buying the reserves, it's the U.S. Treasury itself, and specifically it's the Exchange Stabilization Fund within the U.S. Treasury. And people should remember or be aware the U.S. Treasury has a light side and a dark side. The light side reports the debt that we get reported in the papers on a daily basis, and that the media reports to us. The $19 trillion number. The dark side of the U.S. Treasury is composed of the ESF, which is the Exchange Stabilization Fund. It was created in 1934. Its sole purpose, when it was created, was to protect the U.S. dollar hegemon and to protect the dollar in world for the settlement of global trade accounts. Well, what's happening is all the wealth that is accrued in this Exchange Stabilization Fund, which was seeded, by the way, with $3 billion in 1934 dollars, owing from the confiscation of gold from Americans, which was 6 months later revalued, creating the $3 billion windfall profit. That's the money, the seed money for the Exchange Stabilization Fund. That money has been growing and compounding since 1934, and the net worth of the ESF today, I would project it to be worth in the tens of trillions of dollars. But you see, that money's all off book. The ESF does not publish financials, does not publish an annual statement. It's accountable to nobody, and it operates above all laws. So you've got this rogue entity that's likely the most powerful financial entity in the world, and it is having its way with markets. And when
so they're buying all this U.S. debt that
yes,
people are
sir.
selling?
And that's why, because the ESF is buying these treasuries that foreign countries are pitching, because they're buying these treasuries with off-book money, these treasuries do not show up in reserve accounts. And so now this creates a real dichotomy, because you've got global U.S. dollar reserves dropping, but you've got this illusion or this gimmickry of a strong dollar. Remember, Greg, the dollar has been strengthening for the last 9 months. Well, the dollar can't keep getting stronger if the world's bailing on dollars. So what it means is the drop in the reserves doesn't support the narrative of a strong dollar. So something had to be done to put reserves back into the system. And the way the Fed puts reserves into the system is through reverse repos or match sales. And that is where they sell short-term or government securities on a short-term basis to the dealers in exchange for cash, and this way they can bolster reserve accounts. And so, but you see, match sales are not congruent with zero interest rates. Match sales are congruent with Fed tightening, Greg.
So they had to tighten, they had to raise, so they
had to give the illusion of tightening and tighten once to justify the rounds of match sales and reverses they've been doing.
And the strengthening of the dollar. So people are saying, oh, well, the dollar's getting stronger, even though the world is bailing out on it.
Yeah, like they're doing $200 billion worth of these reverses daily. You see, and this is bolstering reserve accounts. And this is their attempt. This is their attempt to put their narrative back on an even keel, and to make their narrative sound believable that the dollar is strong and the world isn't abandoning U.S. government securities.
People say, well, how come the collapse hasn't happened yet? And you said something really powerful to me on the phone. And you said, to answer that question, how come the collapse hasn't happened yet? And you said?
Well, because they keep lying to us, Greg. They keep giving us new stories. They keep inventing new products to hide what they're really doing.
And isn't the collapse, though, what you said to me was, what, the collapse is happening now. I mean, people are abandoning the dollar.
Now.
Huh?
Of course it's happening now. Absolutely.
So the collapse isn't coming, the collapse is now?
Well, I believe we're in process, yes. Greg, I mean, if you live in Angola, if you live in Argentina, or if you live in Venezuela, those countries are already hyperinflating. You know, isn't it amazing back 3 or 4 or 5 years ago when we talked about Zimbabwe, everyone said, well, that's a banana republic. Well, is Venezuela and Argentina and Angola, are they banana republics? I mean, I look at what's going on with the currency in my country right now, and it looks like our country's currency is going down like a stone. And I mean, I'm wondering where the brakes are going to be for the Canadian currency. I mean, my question is this: if Canada starts hyperinflating, are we just a third world basket country too?
And I want to bring this up because we talked about this in the pre-interview, and I couldn't believe when I saw this on CNBC. I'm like, so former Dallas Fed President Richard Fisher came out and said that they front-loaded the markets in '08, manipulated. They created a wealth effect, his words, and that the Fed is a giant weapon and there's just no ammunition left. And then he also talked about how, the Fed, everybody's relied on the Fed, and people got lazy, which means you're going to get what you get in this next big market implosion, because I'm sure he's safely in gold or silver or land in Paraguay or whatever he's doing. What do you think about that? I mean, for years people have said that people like you were wackadoodle conspiracy theorists, and now a former recent Fed president, Richard Fisher, said, yeah, we rigged it all.
Yeah, well, that's right. Greg.
He didn't say those words, but that's
I've been known as a
conspiracy
theorist, a tinfoil hat-wearing conspiracy theorist for the last 10 years of my life because I said that the markets were rigged. And now a former Fed president has just come out and said, yes, we rigged the markets. So how are you left? Of course they rigged the markets. And the sad thing is the rigging is going to get more extreme, because these people are operating and acting like cornered rats. And cornered rats are very, very dangerous animals and can inflict a lot of pain and damage on people facing them.
Well, China has a lot of problems. They got a lot of debt, but they also have a hedge. And, of course, you know all about this. You basically acquire tonnage for big buyers, sovereigns, big funds, things like that. Another 19 tons went into China, I heard. Another 19 tons of gold.
19 tons is an appetizer for China in their gold bullion acquisition spree. China's been accumulating gold to the tune of over 2,000 metric tons a year for the past 5, 6, 7, 8 years. The Russian central bank has been buying gold in much the same fashion, and as has Indian central bank and the Indian people. There are people in the world who understand the relevance of precious metal, Greg, especially the monetary precious metals, gold and silver, because in a lot of these countries they've seen paper money collapse. And it's inbred in their psyches and in their history that paper money collapses. Just as our paper money regime will collapse, and it's probably in process right now. We're just at the early stages.
Is this why gold and silver prices have been boosting up higher? They don't want that to happen, of course. But gold and silver looks like they're on a strong upward trend.
I believe this is going to continue and intensify, Greg. That's my expectation from here.
You think the trend for price increases is going to intensify? Are more and more people calling you up, your sources saying, I want whatever kind of gold I can get, wherever?
No, we get more and more inquiries as time goes along. You see, the information that you disseminate into the world, Greg, which happens to be accurate, as opposed to what people get on CNBC or on Fox News or from the mainstream financial press. People who are able to think for themselves and who have access to the information are slowly acting in accordance with reality, and they're getting real. And most people are not being fooled by the false promises of precious metal, like the GLDs and the SLVs of the world. They're demanding the real physical metal. And the real physical metal is the Achilles heel to the price rigging of precious metal, because you can't print physical metal. You can print GLD shares till the cows come home. You can print COMEX contracts till the cows come home, and you can print unallocated gold contracts on the LBMA until the cows come home. But the minute somebody wants 10 ounces of gold, and I mean on the latest numbers I've heard out of COMEX, Greg, is that for every physical ounce they claim to have in their depository, they've sold 350 ounces now of paper. So I mean, that's how leveraged, and I refer to it as teetering. That's how teetering the COMEX is.
When does this end? I mean, you said that there's going to come a day when...
There's going to come a day, Greg, when a big major player has contracted for delivery of physical gold and it won't show up, and they won't get it. And, that in my books will be when gold goes bid without, silver too, because, the physical precious metal at some point will not be available and will not be for sale for paper U.S. dollars.
Can you explain something? Well, I got you on, because in your world, in the tonnage world, you're saying supplies are tight, and I'll have an interview with you, and you'll say, wow, in the tonnage world, supplies are tight. But yet people will say, well, I can go down to my local coin store, and I can get silver eagles, and I can get gold eagles, and whatever. Can you tell me what's going on there? Why is it tight in your world, and it's not tight at the retail level, at least not that tight?
Yeah. Well, the nature of the precious metals market to begin with, it's extremely bifurcated. And when you're talking about gold and supply of gold, or whether it's tight, you've also got to qualify it by where you're located and where you're trying to buy gold from. It's sort of, Greg, to some extent, it's a little bit like trying to get a reservation in a nice restaurant at Christmas time or on Valentine's Day. If you're connected with the right people in the right restaurant and have done a lot of business, you can get maybe a reservation. But if you're somebody off the street, you phone them up, you ask for a table, they tell you they're full, and they tell you they got a waiting list. And so location has a great deal to do with tightness. In terms of, in some parts of the world, it's very hard to get even small coins, bars, anything. In other parts of the world, like particularly here in the West, U.S., Canada, where gold and silver are not as loved as they are in the Asian countries and in the Far East, it's relatively more plentiful here. But you see, that can all change in a very, very, very short period of time. So, and my feeling is, and has long been, at some point that will occur, and at some point the available stocks in the West will disappear, and when they start to disappear, it'll seem like a bolt of lightning coming out of a clear blue sky, because they'll be gone in no time.
At the end of 2016, what does the price look like for physical gold and silver coins, bars, ounces, whatever, relative to right now? What's your prediction?
I think very possibly many multiples of the price right now. Very possibly.
Before the end of the year?
Very possibly many multiples.
And your contacts, I mean, you deal with people that have billions of crazy amounts of money, billions of dollars. They buy gold by the ton. What are your contacts saying now that we've had a month in from your interview? What are your contacts? Did any of your contacts call you up and say, what are you talking about, Rob? The system's going to be great till 2017 or 18. What did your contacts say?
I had a long chat with somebody this morning who's absolutely just telling me that he feels that we're very close to the end. So I don't really want the end to occur or end events. You see, Greg, it's not going to be a happy day when the things that I've long talked about happening, when they happen, it's not going to be a happy day for anyone. Not for me, not for you, and it's going to be a time when we're all going to have to take solace in because it's going to change the way we live dramatically. Dramatically.
you had said that before the end of, you said this back in December, you said, 120, 90 days, before the end of the first quarter, we're going to see things be shaken, or I don't know what your exact words were, a closure or the beginning of a closure or major problems before the end of the first quarter. Are you sticking with that before the end of the first quarter? Yeah,
I think so. I think the rate of these sort of seizure events that we're seeing in equity markets, I think they're likely to quicken and intensify. Absolutely.
Could the Federal Reserve, Egon von Greyer's said they're not going to be able to raise rates. As a matter of fact, before this, he said second quarter, he said they're going to have to backtrack. They're going to have to take that rate hike away. They're going to have to go backwards.
Whether they take the rate hike away or not, Greg, what they will be doing, let's put it this way: future rate hikes are off the table. That I believe is a given, but they may leave the Fed funds rate right where it is and just go directly into another round of quantitative easing, leaving rates where they are.
And then what happens to gold and silver?
Well, that should put a big fire under their seats, and they should go a lot higher. But Greg, how quickly they go higher is all predicated on how long people are willing to accept paper promises over the real thing. And I do believe we are going to, at some point here, we're going to see a major breakdown in people's willingness to accept paper promises over the real metal, physical metal.
One of the things I say, because I tell people this, because they want some kind of trading. Oh, well, listen, since 2011, that, the price has gone down. I don't care. I mean, this is the biggest financial calamity that we're facing in all of recorded history, going back, 5,000 years. And yeah. My thing is, you got to be early than late. Is this the biggest financial calamity coming to hit us in all of recorded time?
I believe so, yes. And your comment, Greg, about trading, I truly don't believe the appropriate course of action right now regarding precious metals is that I don't believe anyone should be trying to trade them. I think people should be trying to source and locate physical precious metal if they have investable monies that they can put to work. I think they should be accumulating, and I think they should be hiding it in a good place, in a good safe place. And this is not for trading. This I think we're coming into sort of an end game scenario here. And I honestly believe that if you're either going to be holding it or you're not going to be holding it, and there will come a point where you can't get it. And once the markets go bid without, then you're stuck with what you own. And if you're stuck in paper assets, the value of those paper assets is going to be highly suspect and very likely goes down in a very significant way.
Food, water, PB. You're talking before you do any buying of precious metals, get yourself some food. I mean, you're talking this is going to be biblical.
Could very well be, and storable food, good idea, and a means to protect it all, probably a good idea too.
Rob Kirby, Kirby-Analytics.com. You also have a newsletter. It's very reasonable. What is it, $187 a year or something?
$145 a year.
145. Sorry, I blew your thing up. $145 a year. I'll put a link for you YouTube people. You can go to the bottom of the right through. There'll be a link to the USA Watchdog site. Scroll down to after the interview. I'll have Kirby-Analytics.com there, and also his sign-up page. Kirby Analytics is a great little tool, and you give personal back and forth email-wise to your clients, and it's good stuff. And you nailed it. You nailed it from December. You said, boy, we're getting a shaking. It's certainly looking like you're dead on.
Well, the trees are starting to shake a little bit, Greg. It'll be interesting. It'll be interesting and entertaining to see what unfolds over the next 2-3 months.
Rob Kirby, Kirby-Analytics.com. Thank you for joining us today on USA Watchdog.
Pleasure being with you.